Welcome to our guide Investing and Beyond, where we set out a practical framework for building wealth amid rapid transformation and uncertainty, focusing on innovation, strategic opportunity, and resilient decision making so you can navigate markets with clearer priorities and a long term perspective. Looking at the investment landscape today, markets are moving fast as technology, geopolitics, and policy interact, and the image here underlines the bustling trading environment that demands disciplined strategy, active monitoring, and a readiness to adapt to shifting correlations and new return drivers. The 2025 market snapshot highlights three forces shaping returns: a surprising global rally that persisted despite tensions, powerful AI-driven capital spending lifting productivity and GDP, and sticky inflation that keeps risk models and portfolio construction under pressure. So investors must weigh growth potential against evolving inflation dynamics. Despite a wall of worry early in 2025, markets climbed as tariffs and policy uncertainty tested sentiment, corporate profits and heavy AI investment acted as shock absorbers, and the visual chart shows how resilience translated into strong year-to-date performance across equities, gold, and emerging markets, defying many pessimistic forecasts. The Fed faces a genuine decision point in December 2025, balancing a moderately restrictive stance expected into 2026 against growth support, and investors are positioning fixed income around 3 to 7 year maturities to manage duration and be ready for potential rate cuts while guarding against uncertainty. This section introduces the key investment themes we will explore next, providing a roadmap that ties together technological disruption, geopolitical fragmentation, sustainability trends, and demographic shifts, all of which have practical implications for asset allocation, risk management, and long-term portfolio positioning. Artificial intelligence is now the new growth engine, with hyperscaler cloud providers driving major productivity gains, AI capital expenditure supporting economic resilience even amid trade tensions, and transformative applications reshaping industries from healthcare to manufacturing, as hinted by the server imagery on the page. Deglobalization and multipolarity are redrawing supply chains and manufacturing locations, forcing regional diversification in portfolios, while currency dynamics such as a softer US dollar can boost international equity returns, so investors should reassess geographic exposure and supply chain linked risks in their allocations. Sustainability and ESG investing have moved from niche to mainstream as capital flows target environmental, social, and governance factors, which increasingly drive long-term value creation and spark growing demand for green bonds, renewable infrastructure, and impact funds that align financial performance with broader resilience goals. Aging populations and demographic shifts are creating a wave of investment opportunities in healthcare technology, pharmaceuticals, and wellness, while breakthroughs in biotechnology, genomics, and digital health platforms promise to transform prevention and treatment, making longevity an important long-term thematic allocation to consider. As we move into portfolio construction in this new regime, the emphasis shifts to flexibility, thoughtful diversification beyond traditional stocks and bonds, careful duration management, and using alternatives and thematic exposures to balance return objectives with evolving correlation patterns and inflation risks. Rethinking diversification means acknowledging shifting correlations and adding alternative assets to reduce portfolio volatility, so strategic allocation to infrastructure, commodities, and hedge funds can provide downside protection and enhance risk-adjusted returns beyond the classic stocks and bonds framework depicted in the chart. Fixed income strategies today favor intermediate maturities to balance policy uncertainty and duration risk, selective credit exposure for yield enhancement while managing default risk, and inflation-protected securities as an effective hedge against persistently sticky inflation pressures in a changing rate environment. When selecting equities, growth names remain attractive but require nimble, selective approaches due to elevated valuations. Value sectors can benefit from reopening and inflation resilience, and thematic investing in AI, clean energy, and digital transformation offers targeted exposure to structural innovation trends shown in the accompanying visuals. International equities present a structural opportunity as emerging markets and developed foreign stocks can benefit from US dollar weakness, relative valuation advantages, and the rise of regional innovation hubs, so geographic diversification becomes a critical lever amid evolving global power dynamics and trade tensions. Now we spotlight leading investment firms and strategies to illustrate how different approaches are responding to the new market regime, showing a range of tactics from diversified scale and research-driven insights to high-conviction thematic bets and sustainable investing frameworks. JP Morgan Chase combines diversified scale with innovation, managing roughly $4 trillion in assets while serving millions of consumers, and the firm emphasizes operational resilience, robust risk governance, and integrating sustainability across business lines to support comprehensive wealth and institutional solutions. BlackRock iShares advocates deliberate diversification and a blended approach that pairs traditional equities and bonds with alternative asset classes, while positioning fixed income thoughtfully for potential late 2025 rate changes, and the trading room image underscores their scale and data-driven portfolio construction process. ARK Invest focuses on big, disruptive ideas across AI, genomics, robotics, and energy storage with high-conviction ETFs targeting companies that could follow exponential growth paths. But investors should remain mindful of the heightened volatility and concentration risk inherent in such thematic, high-growth strategies. Morgan Stanley emphasizes integrating sustainability and inclusion into its client offerings through leading research on longevity and AI, tailored wealth management that addresses multigenerational goals and values, and a deep commitment to sustainable investing principles and venture support for diverse entrepreneurs.